BitShop, the first fully privatized on-chain auction house, introducing new ways to generate liquidity for Web3 assets, backed by KuCoin Labs and Republic Capital. Bid small, win big at BitShop.io.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it just gone 1100 UTC. Big shout out to everybody joining the stream live today. See some happy faces on here already. Good morning, MMGOT as well. Good morning to Whack, who dropped us a message earlier, and all the Bird Nest fam, of course. We've got Erica here. We've got Nit in the house as well. Our dear friend Kelly, all the way from New Zealand. Touche, morning, my friend. And James 14, good morning, good morning, good morning. Fantastic, as always, to see you guys on a Monday. Also, anybody else that's new to the channel as well. Just looking forward to a really, really good week ahead. Craig, good morning, my friend. Hope those work meetings aren't eating you up too badly today. So, going to stick with our normal theme. Yeah, my man, Touche. Yusuf, good to see you, my friend. Good to see you. So I wanted to obviously keep with our normal Monday theme, which is looking more at the education side of things. Good morning, Eric. Good morning. Whack, a good friend of ours at the Nest as well, student of ours, very, very active community member, and someone who's normally here for the live streams as well, who I don't think can make it today, was asking about order blocks and breaker blocks. It's something that kind of, I use quite a lot of breaker entries trading crypto. One of the main reasons for that is the volatility within the movement of cryptocurrencies, right? Hey, there he is. We're literally just talking about you, Whack. Your ears must have been burning, mate. I'm just looking back through the messages at the moment because I thought it was a really good point, and I've had a couple of other DMs about it as well. So Whack's question was, we've spoken recently about breaker blocks, but you also mentioned order blocks on the show as well. Would you be able to demonstrate or show under which circumstances you decide which ones to use, or whether you would favour one or the other? The only reason is during a setup involving a sweep and a fair value gap being formed with displacement, technically both an OB and breaker block would be present in the same form or another. Yeah, it's a really good observation, right? But I think we can really we can dive into that. So looking at it in terms of which we would favour, just making a note of this, and why. And actually, what's really good about this is this leads us on to a kind of larger topic, which means that just because we run a certain level or we form a certain pattern or a fractal or we hit a certain set of criteria doesn't mean we should enter. The kind of contrasting side of that point is that actually when we hit our actual set of trade parameters, right? So a set of guidelines, a checklist that we need to abide by, when we do hit those, something that's really, really important in the way that I trade, and I would imagine it's the same for other traders, and it certainly is for those that I've spoken to, is that you build yourself such a consistent and clear set of guidelines that when you hit those, you don't hesitate to open a position, right? And actually, one of the things I'm going to go through with you was my really, really brutal trading week last week in FX. So had a decent kind of okay low time frame week in crypto, which was okay, but I got really, really battered on FX last week. So the week prior to that, I had 5 trades and 5 winners, 100% record, which is quite rare, right? And actually they say when you have your really, really high moments, and I've certainly experienced this as well, it's when you need to be very, very aware that the market can bite back, and the market does really like to humble us. Works exactly the same in sport. I really like my football. I love my rugby, my golf, bits and pieces as well. But one of the things that's very, very prominent in football statistics is that a team is actually strangely most vulnerable to conceding in the minutes after they've scored, right? And that side of things all comes down to psychology. So I love kind of touching upon these points because I think there's a lot of synergy between them. And actually, I mean, people that are on the stream will know I'm very, very happy, if not more happy, to even talk about my losing trades than any winning ones. I don't really post tons and tons of winning setups. Every now and again I do. All my stats are available, and so are the Bird Nest stats. We're always very transparent about that. But I do find that we will learn a lot from our losers. And one of the big journeys that I've gone through recently is transitioning over to Forex trading, something I did many, many, many years ago, which was a very, very different dynamic back then. But I was also trading a very, very different system, a much more high time frame system, right? So it had very, very different implications in terms of looking for things we have to consider, like FX markets are hugely driven by news events. You've got the spread to factor in, depending on what broker you're working with, which sometimes can be as much as like 30 plus points. So to give that, if you ever want to check that on your chart, when you set a position, yeah, take a look at what the position is and then using either the position sizer or just using the little price and date one, yeah, add on an extra 30 points, yeah, or 3 pips to your position and see what a big difference that makes. So, one of the things it did was it kind of made me a little bit hesitant to enter positions, right? Because I'd come off the back of 2 losing trades, in which case, then what I do is I draw a line under it. I had 2 losing trades. I had one trade that hadn't triggered. So I said to myself on that day, right, okay, I'm going to step away from the charts today. I'm going to review. I'm going to come back tomorrow. If the same things keep happening, then I'll do a bigger review over the weekend. And it did. Came back in the same position, exactly the same carbon copy on the Thursday as it was on the Wednesday. 2 losing trades, 2 winning trades. The 2 winning trades hadn't filled on the limit order, again, because we need to make allowances for the spread, meaning that where I set the limit order, not the same as crypto, the spread hadn't quite caught it. So yeah, definitely frustrating. Very, very vocal about it. Was speaking to the prop desk team about it. Some people had a really, really good week that we're working with last week, and other people didn't. But it's really, really important to learn from those. So we'll touch upon a couple of really key lessons that I learned with that later as well. So obviously with today, oh no, hello my friends. Sorry, I didn't see you sneak in there. So obviously with today we have a little bit more of a focus on education. So I left this up because this is the inside bar pattern, right, that we've been trading on the 4 hour. So basically, it's a high time frame inside bar. For anybody that wants to know more about that, I've got some Twitter threads that you can learn from. We've also got some great educational material on the Nest. So do go and check that out. And if you've got any questions, just drop me a message and we can look to go through it. But one of the things that I do want to do is take a look at the order blocks and breaker blocks. So first of all, just to kind of go over what they are, if we just find a clean bit of chart. Let's have a look down here, right? So now the difference between an order block and a breaker block. James, thanks, mate. Yeah, they're really, really time consuming, actually, threads, but they're a really good way to kind of engage with people a bit better. And I think people do kind of, well, hopefully kind of find them valuable. Now, what I would say about this, first of all, the big caveat here is that they're taught very differently by different people. You'll hear some people, referring to them as, supply and demand, other people as order blocks. My teaching has come from several different sources over the years. A key one being Trader SZ, ICT as well, from his original core mentorship many years ago. But as with anything that I say every week, and I would suggest this with anybody that you listen to in this respect, just speaking from my own personal experience, the reason that I'm doing this is because I found it really, really useful when I was starting out to hear full-time traders talk about their experiences and the learning that they went on. And I found that I was able to kind of access some shortcuts in that respect because it allowed me to learn from mistakes that they'd made or hadn't made, right? But one of the things I say to anyone is whatever you see at face value, don't take it at face value, go away, test it, try it, find out other people. It doesn't mean that someone's trying to mislead you. It just means that you might see something in a different light to someone else, right? Which is why we get a number of these very similar things that are described in different ways. Now, order blocks and breaker blocks are very much of that ilk. So let's take a look for you, all right? And again, this is my interpretation of it, right? I'm not saying this is the be all and end all. I just say go away and kind of trial this. But on the basis of simplicity, yeah, with a order block, what we're looking for the very, very basics, you're looking for the up candle here, yeah, before a move that, first of all, breaks market structure, or you can have that in a continuation of market structure. It gives the order block more validity if the move lower, the impulse move lower, has displacement. So if we see these fair value gaps here, for example, it shows that we've got impulse. Now, the reason for that is because if I'm thinking logically here, and let me just draw this in for you so that we've got an example, and even what part of the order block that you make an allowance for is really, really key. Whether you take it from including all of the wicks, whether you take it just from the lower portion of the body, whether you just take it just from the body. Yeah. So it depends what you want to see. Quite often, and one of the good ways to look at candles, in my opinion, is to look at the body for where the trading volume has taken place and the wicks to show you where price tried to get to but failed. Yeah. Now, one of the things that's quite interesting about that, and the same as how we look at a fair value gap, is if we allow for the bodies here where the main trading volume is, we can see as price comes into this, see how the wicks try to make that escape, but how they're drawn back within that area. So if we're seeing this, yeah, as an area where we expect selling pressure, right? Why? Because when price tried to push up here, it was met with the very opposite reaction. Yeah. So there's a couple of things relevant here that we want to look at, right? That's, well, if there was a lot of selling pressure here that forced the market down and that was successful, when price reaches there again, maybe we're going to see that same selling pressure again, right? So that's always worth noting. Again, we're never just going to act blindly on this, right? But what we can do is we can monitor what happens when price gets here. So we see this big move away from this prominent up candle here. So the key thing is a bearish order block is a bullish candle, yeah? So this is your up candle before a strong move lower, right? When we revisit that, as we do here, if I get the right arrow first will help, we revisit it like we do here, then what we can do is on a lower time frame, we dive into the charts here and look for our reversal setups, right? And all we're doing is targeting clean liquidity resting lower, yeah? So we see we've got that clean low there, clean low here, which we can see we ultimately take that out here, come in to rebalance this fair value gap, yeah? And then price comes back up again. So the way that I'm looking at price is either searching for liquidity above untapped highs or below untapped lows, yeah? Or it's moving to rebalance an inefficiency, yeah? So a fair value gap. If it's not, then it's heading for an order block, right? So, hey, good morning, Hans. How you doing, my friend? So when we're looking at an order block like this, what can it teach us? Well, one thing is, if we think there's sellers present there, when price comes back, then our bias is to look to see if the sell pressure is still strong, right? What would I want to see, and what else can this tell us in the opposite respect? Same as a fair value gap, right? The same as any kind of key support and resistance level, however you see it. Quite simply, that if we come into this area, yeah, we see price try and get out, fails and comes back in, tries to get out again, fails again, yeah, and then we see this price rejected. So notice how, all the bodies really kind of respect this area. It's not always going to be that clean, but when you do see it that clean, it can really tell you something. Now look what we get here, right? You see this drop. Now, you'll hear me talk about this a lot. Waiting for the market to show its hand, yeah? Waiting for the market to give us an indication of where it wants to drive to next, yeah? So if we see price try and escape above this and fail, yeah, fails to get acceptance above this level and starts to show weakness, we can monitor certain things in here to give us an indication of that weakness, all right? So first and foremost, we have a bullish fair value gap here, which I'll do in green first of all to show that it's bullish. Why? Because when price came up to here and made this attempt higher, it gave us this beautiful fair value gap. Now that fair value gap says to me, let's wait for price to come and interact with it here. If we're going to be bullish, I expect a bullish reaction from here. Yeah, then when we establish bullish market structure or continuation, we can trade price higher, right? So now what comes into play is we've now taken this area of key resistance and flipped it to support, right? Showing that price has got acceptance higher, and then we can look for higher prices. However, what actually happens here is price cuts through this pretty much straight away, right? So for me, until we get a strong reclaim of this, this has now become an inverse fair value gap, right? Which I draw on the charts as purple, and it's showing that we're seeing that now as resistance. So it doesn't mean that we have to enter here straight away on the lower time frames, but what it does mean is that we can monitor price action, and when we get an opportunity like this, which we see as a bearish fair value gap, then when price comes back into here to rebalance, we trade it on the lower time frames. Where to? Yeah, the low-hanging fruit, right? The clear and obvious target. Price is drawn up into this, Lower time frames, we look for short setups down to here. Now, why it doesn't look like a lot on a 4-hour chart, yeah, that's a 2.73% move. Yeah, that is a really, really big move. All right, in crypto, that's a big move. You can make a lot of money off those day trading. Okay, and then again, we say to ourselves the same thing as we did with the order block, right? When price returns here, what do? Well, if it's currently rejecting price, yeah, then our bias remains bearish, right? We take our high time frame bias into account, and until we reclaim this, which we can see we didn't do, yeah, then we're treating this as a point of possible rejection until the fair value gap is rebalanced. All right. And James raises a really good point in here as well. AD, good morning. Brawl, you absolute beauty. How are you doing? Good morning. And James raises a really good point here as well, right? Using the mean threshold of 50% is something you can definitely do. Best way to do that is just get yourself a Fibonacci tool. Yeah. And then you can just take the low to the high of the fair value gap, and then your mean threshold, your 50% line, your EQ, if you like, your equilibrium is there for you to see. Now, if you start seeing price close above this, then you can kind of start to say to yourself, all right, maybe this is showing some strength, right, to push above. But again, that's something I'd really, really recommend making sure that you try that out. Yeah, you can obviously do the same with order blocks as well. But if we take a look at this one, for example, yeah, we can see that price started to have these closes above it, which can be seen as a sign of strength. However, we always want to wait for confirmation, right? So when we started to see it reject from the highs, when it then got back below, all of a sudden you can see this move here as a deviation. Price closes back below, sign of weakness, and then we can look to trade that lower. All right, let me just get rid of that. So to kind of go into a little bit more detail on what WAC is talking about now that we've got the context, is an order block, yeah, is anywhere we would see something like, this, for example. We see this order block coming up here. Now, we would look at this after we have this big move away, yeah, and we have displacement here. And one of the things that I didn't mention earlier is it's not just about when we revisit these areas, right, and say to ourselves, okay, we're, going to treat this as selling pressure. The other thing to consider as we're coming up into these is that there's people trapped in here, right? So, and what do I mean by that? Not actually physically in here, but traders that were going to go long here, henceforth this powerful up candle here. Let's look at it. It's a nice big bullish engulfing candle. Tiny little kind of doji there, a bearish candle, big bullish impulse move. Now, what that tells me is there's people getting on board here, right? There's that, or there's manipulation forcing the market this way. And then what happens, and you see this quite often, there's a very quick move away, meaning that people that were long here are trapped, right? If they don't have stop losses set, and some people won't, or maybe they've got stop losses down here because they're playing a much larger, swing or investment position, then when the price moves away aggressively, the chances are they're going to think, hang on, I was wrong about this, right? The market hasn't got the strength that I thought. So when the price gets back near to their entry, they're often very happy to just close at a small loss or at break even and then reassess. Now, the flip side of that is how markets very, very often are manipulated. And people see manipulation as a really, really bad word or a bad thing. It's not. It's how the markets work, right? It's smarter people taking money from other people, and that kind of constant flow always works. And not just smarter, lucky people. There's loads of factors that go into the market. At the end of the day, what we're doing is we're gambling with a lot of extra steps, right? We're using a lot of market data, information, the same way that professional gamblers will do. What we're trying to do is find ourselves an edge so that we're not right all the time. It's just not possible. But that the amount of times we are right outweigh the times that we're wrong. Or if we're wrong more than we're right, then our system is one that returns us a higher risk to reward, a reward to risk ratio, meaning that, for example, someone like Burb, might only have a 35% win rate for his strategy, but he is exceptionally profitable. Why? Because his winners run for huge returns and his losers are always cut at 1R. Yeah. So if his average R for his winners is 3, 4, 5R, but his average loss is 1R, well, then he can afford to lose a lot more trades than he wins, right? So it's all about understanding the system. So before I get into that too much, That's the other principle we're looking at here. And when we're looking at the manipulation side, what you will often see is this strong candle up designed in order to take out liquidity above these highs. Yeah, we see these sloped highs in here. Right, it also takes liquidity above this high, right? Convincing people to go long, yeah, taking out people's stop losses up here that were short, turning them into buy orders, filling those with their sell orders and going, thank you very much. Now, when the market moves in the other way, you often see it return to the similar kind of area, or at least to this inefficiency here, at which point people are then convinced again that the market's recovering to only be flipped again, and then you see a larger secondary move like this. So this is where order blocks can be really helpful, because what we're saying here is this was the up move, this is where the buyers were before the market sold off. Now when prices return to here, we expect price to sell off again, because if there's no acceptance above this, we expect rejection. Very, very simply, if we do get acceptance above this and we hold this, yeah, we build that market structure, then we look for higher prices. Until we get that, then we expect this to suppress price. All right. Now, we would obviously look to add in confluence from a high time frame bias, etc., right, and support resistance levels or key buying and selling areas that we've identified. But in a nutshell, if we're looking at that, that's what we're looking for. Now, the other thing we can do is when we find a very obvious order block like this, is you can kind of just look back on your chart and say, well, okay, actually, if we look at this here, maybe this has played a role as well. This up candle before this aggressive move lower. Why would I include this? Because price has come down, taken out this low down here, right? So therefore, you've had a big impulse move lower. It's ripped through these fair value gaps, left an inefficiency, its own fair value gap on the way down. So when price returns here, once again, we can say to ourselves, well, price had a really strong reaction when it got to here. Always look left on our charts. We see the fair value gap here. Price has rebalanced this, right? Had a reaction here and then sold off. So if you look here, I know this can feel like you're kind of going around forever. We look for the high volume up candle before the drop. You know, all of a sudden, now there's an argument that actually that's the order block, right? That's suppressing price. So we haven't had price kind of pop back above this, but if we look later down the line at some other examples, if we were to reclaim this, yeah, and let's have a look if it has any prominence ahead here. Right? Now, this might not look that clean, but what we can see quite clearly here is price even this later down the line. We see these really, really clean rejections here, right? Price clearly showing that there's key sell pressure. We revisit this area again, all of a sudden we see price getting held up in here, right? Then when we get this impulse move higher, that's when we're looking for this to hold, right? In this particular instance, we didn't really get it. We got a move here, probably a day trade in there, a deeper move into it here, maybe a day trade in here. But for me, the more we're holding on and clinging to this level, the weaker it's looking. And this here, really, if we draw this across and we call this like, you know, a point of interest, a POI or a pivot point. Let me just hide this for a second. Let's just turn this off as well. Right? Can we see this here? You know, I know it's a large area, guys, but look, big sell pressure here led to a big, huge impulse move lower. Price comes back, rejected again, big sell off, right? So naturally, when price gets back to this area, we expect a bearish reaction. But we've played in our high time frame bias, which is bullish here. We've had this big impulse move up, but price still gets caught here, breaks out above, yeah? This now, for me, once we've broken and held above this, we would look to this as support, right? So we're then in here daily looking for our long setups as long as our high time frame bias remains bullish, yeah? Meaning that we're looking for sweeps lower. See this? Swept, price attacks the highs, right? What does this do? Sweeps this low in here, these equal low, relative equal lows. Price ultimately attacks liquidity higher up, yeah? Now what happens is the dynamic changes. For the first real time, apart from this one here, we see a big move above all of this liquidity, driving price lower, leaving this bearish fair value gap. And that was our really, really key focus in here for quite a while. because that was really suppressing price for some time. Yeah. Dipped in, sold off, dipped in, sold off, sold off again. Yeah. Now, what happens here is as we got this big move above, yeah, see this? Big impulse move higher, leaving this fair value gap. Let me know, by the way, guys, if you want me to zoom in on this a bit more. So we have this big move above, leaves this fair value gap. That's what changed our bias, just using this order block from bearish to bullish. So we're looking for day trades in here, sweeps of lows, yeah, as we got here, attacking highs, sweeps of lows, attacking highs, sweeps of lows, attacking highs. Ultimately, what happens here is we attack the highs, the big impulse move lower, yeah, leaving this fair value gap. Now, the opposite happens here. As we got that big impulse move back there that got us bullish, this one is now saying we've lost this level again. This big impulse move down here had us bearish, or certainly had me bearish, meaning that I was then flipping my focus on this back to seeing this as resistance. All right. Ultimately, while we're below this, I'm looking for price to do the opposite from up here, which is attack highs, which we get here. Yeah. And then look for liquidity at lows. Right. So my expectation, as I wrote in the Bitcoin report previously, is that we've had this big impulse move higher. Yeah. We've now rejected up here. We come back down. So for me, I would look very much for price to be taking out liquidity below lows. All right. However, we start breaking structure and moving higher, then we could look to counter trend day trades into this area again. But our expectation is for a rejection here until we reclaim it. All right, guys? Does that make sense? Yeah, please let me know if it doesn't, or you want me to go over anything in a bit more detail. I know Whack, he's going to be watching this one back. So, guys, if you do watch this one back and you've got any notes, please do let me know. Yusuf, my friend, how to identify signs of weakness and strength? Yeah, sure. Let me add that on as well. So, how to spot strength and weakness. Yeah, I think that's a really good, really good one. Craig, thanks, guys. Really appreciate it. Erica, are you using EMA or moving average or just fair value gaps? So I like to read market dynamics is how I see it, which is, let me show you. I used to trade moving averages a lot. They were a huge part of how I traded. And actually, funny enough, when I came to the nest, I'd kind of moved away from a lot of my kind of ICT and SZ inspired low time frame trading. I was using much more of a swing system, which was working incredibly well for trending environments in crypto at the time. Very similar to the system that Libs used to use. I think actually that's why I found such a good early synergy at the nest, beyond obviously a lot of the belief that Burb showed, in me and the team. But you can definitely use moving averages, right? What I would say with using MA is just to be really confident on the ones that you're using. There's somebody that I have no affiliation with at all, and I've never met her either, and I'm really desperate to, because she seems like such a beautifully humble, intelligent lady on Twitter. She's called Dentoshi. Please go and check her stuff out if you're interested in moving averages. She has this wonderful way of teaching it. She's got this brilliant little video at the top of her stream showing how she uses it. But also someone else I would say is someone like Pedma7, right, and Crypto Burb, because they're using a lot more of our in-house indicator, which is the B Pro, which is set around moving averages, right? But it's a really interesting way to trade. But for me, Erica, before I digress too much, what I'm doing and this is really, it sounds really horrible, right? This is really trash PA, but let me give you just an example of how I like to set a bias. And this is something that I've been over a few times with, especially a few of my kind of like real hardcore, like former ICT colleagues or mentees, and other people that trade it exceptionally well. I like using fair value gaps and liquidity for me to judge where the market's going. Yeah. So looking at key liquidity to be swept, for example, like when we're having this move here, for me, it's really quite simple to see that we come from setting higher highs, higher lows here. Yeah. To breaking down. So see this? So we've taken liquidity above all these highs. Yeah. Price here is higher highs, higher lows. So we're bullish. We set this high, but then we have a shift in market structure here when we take out these lows. meaning that we've got a market structure shift. What I'm then doing is, right, I'm then looking for things here. Hopefully that stands up. Maybe that's a bit too aggressive, actually. Tone that down just a smidge. There we go. I hope you guys can see that okay. So what I'm doing here, Erica, right, is as price comes up to here, if I'm expecting bullish continuation here, because there's no doubt before we get to this point here that we're seeing strength, right? So I'm then looking for a bullish reaction. I'll do this in green from this fair value gap. Yeah. Now what happens is when price cuts through this, which happens here, yeah, then my bias is starting to shift. We've had a market structure shift here. Where's that come in when we've taken out this low here? Well, it's a shift in market structure because we've just changed dynamic. We haven't broken structure yet, right? And I'll explain the difference. So that's our market structure shift. Why? Because we've gone from a higher high to setting higher highs and higher lows. We've still got a higher high, but for the first time, we've got a lower low. That's the first sign, and this ties in with what you're asking there, Yusuf, of weakness, right? Is the fact that the market has now stopped delivering from bullish fair value gaps and has actually now inverted this. How would I trade it? Quite simply. Remember what I said? Shift in market structure, so now I'm alert. I here now need to see two things, right? As price comes up into here, we're either going to see price rip through it, right? And if we get back above here, then I want to see this here, right? Why? Because if this is the order block, right? Remember the last up candle before this shift of structure, yeah? If this is the order block that I expect to reject price, right? Why? Because we've shifted structure. I wait for price to return here. Now my focus is on this order block, yeah? And this bullish fair value gap, which has now turned to an inverse fair value gap, meaning that I'm now expecting both of these to act as resistance. Meaning that on the lower time frame, if we get in here and we see any short setups, that's what we favor. Into this liquidity first, then these lows, this inefficiency here, and ultimately this order block, right? Why? Last down candle before the expansive move higher, and it left this fair value gap. Yeah? So if we blitzed through this and we turned that order block from bearish to bullish, then I'm looking for longs in here, right? So quite simply, it's much more of a focus on how the market's moving, yeah? So now if we look at an opposite example, when we have this move higher, price is delivering, coming down, lower lows, lower highs. Where did we think that the market might shift? Here, right? Lower high, lower low, lower high, lower low, higher high, right? Okay. So if this is our higher high, this is our market structure shift, right? So this is where we're at our point where we're determining whether we have, if we're going to get a market structure shift and a break, or if price is going to revert. We don't want to just guess. So what happens? Price gives us the market structure shift. Now, remember what happened when we were up here? We got this market structure shift down, didn't we? Right? So we're saying, okay, well, when we set this fair value gap, we wanted that to be respected, right? But it wasn't. It was carved through. So why would our expectation be any different here? First of all, we have this bearish fair value gap. Yes, it's a thin one, but that we're expecting to reject price. Yeah, it doesn't. What happens? Price rips through it. We shift structure. Okay, interesting. So now that's obviously become an inverse. So fine, we can account for that. Now our attention turns here. This is a bullish fair value gap now. Yeah, see, we've left the gap here. So when price retests this, we're now saying, okay, when price comes in here, we first of all want to see this respected. Immediately we don't. Look at the bodies closing outside of it. That tells me this isn't going to hold. Now, when we close below this, this now becomes an inverse fair value gap, yeah? Meaning that now, when we return to it, in any of these candles on, from the Saturday the 3rd of June all the way through, all we're looking for there are shorts into that target, which is ultimately very close to that target as well. And then we zoom out and we say, okay, Where else would we be looking to support price here? Well, this is the order block, right? Before that expensive move higher, that's our next logical point that we could expect for price to hold. And that's what we get. So all we're doing, or all I'm doing, is just monitoring where price is at a specific time, and I wait for it to tell me, yeah? So this one, let's use this as an example, right? Because price really runs away here. So it kept us bearish here, kept us bearish here. Well, now we see price attack a key order block, right? So what we're saying here is exactly the same. Where's our last bearish fair value gap? Is here, yeah? So this was red. Boom, comes down. Bearish fair value gap. Is it respected here? It is. So what happened here? Right? Same as here. We're favoring short positions because our high time frame is bearish. So we're looking to trade lower to this liquidity, right? Which we take out. Beautiful. Now, price continues to reject here because look at what's happened. We've set this bearish fair value gap. We've left these beautiful equal lows here. Let me just mark them up. So there we see that as engineered liquidity. That's a really key target. So what do we want to play into that? Well, we wait for price to get into here. This is our bearish fair value gap. So we're looking to go short when this candle interacts here. What happens? We look on a lower time frame, which we'll do shortly. We get our short set up, which attacks the liquidity below these lows. Now what are we looking for? Well, we've seen a bullish reaction here. We're looking for this fair value gap to remain bearish, but it doesn't. Price closes above it, right? With this candle here. What does that do? That flips this to an inverse fair value gap, right? What do we then see here? We see price holding, which means as long as price holds this, our bias now flips to bullish. And once this fair value gap's closed here, yeah, we've closed above it. So from this candle on, what supports our theory is the fact that we've now, at the close of this candle, also left a bullish fair value gap below. So can you see how we can use the confluence almost in the way we would be using market structure breaks, but it gives us a little bit of an early in. So just to show you and kind of finish up on this, on what we would do in this situation, if we now draw this back and we look at the two different scenarios here and here. Sorry, just take a sip of tea before this thing goes ice cold. There we go. Better. So remember, like we were saying, and it depends what time frame you're trading on, right? And also if you take into account time of day. For me, for example, I like to trade, starting to explore London a bit more now with FX, but I'm typically a New York session trader. That's what this blue line is along the bottom, right? But what you're typically looking for is everything we've discussed. As an entry technique, you would look for price to draw lower, then break structure or shift structure higher, which it does here, and then you would look for continuation up to the highs. So here, whilst we hold this, we're bullish, right? So for me, if I've got a bullish bias here, then my MO is this. Regardless of what happens, this is what I need to see to trade. I would do this on a lower time frame, but I'll show you it on this. And this is always the same. My bias is bullish, right? Because we've inverted this fair value gap and we're trading above it from this green arrow. So every time we get in the New York session, right, I need to see a couple of things. I need to see price sweep a low. Let me just zoom in for you guys so you got a bit more clarity on that, yeah? I then need to see a structure break or shift that leaves a fair value gap. Now, considering as well, guys, that I'd be executing this on the lower time frame, but just to show you, in here, still within the New York session, I'm looking for my entries on a lower time frame, yeah? So I show you how you would decant this down, or how I would decant it down anyway within the New York session. Depends how low a time frame trader you want to go to. I do a lot of executions on the 1 minute, but you can go and you can use a 2 minute, 3 minute, even a 5 minute, right? If you want to look for some different setups. And as we can see here, even on the 3 minute, we're then looking for the same thing, right? Remember what that was? We want to see a sweep. So price purges lower here. We then want to see a break or a shift of structure. We get our market structure shift right here. And we get the imbalance, right? We get the fair value gap that's left here. So in terms of a long setup, and this one does come dangerously close to tweaking this, right? Which is why I always say on my streams, not just with crypto, with FX, but especially with crypto, I never set my stops completely tight on this. Now, we can see here we would have been all right. Some brokers you might not have done. But for me, just adding a few extra points or pips, it can just make a world of difference, right? Then what I'm doing is I'm looking for the local highs and I'm saying, okay, have I got a 1.4, 1.5 R, 1.3 at that one, 1.5 at this one? Nice. So I can either trim a little bit of profit there, right? Or I can just move my stops to entry and protect my position. Yeah. What I will do quite often, depending on the position size, is I will take enough out of the trade to cover my fees, meaning that if I do get stopped out of break even, I've actually have a proper break even trade. I really like these equal highs here, right? So that would probably be a key target for me. But ultimately, we can see that we've got, a lot of liquidity higher up. Yeah, we can see we come down, get taken out after target one, no problem. We've booked and secured some profit. All right. So for me, that's how I like to trade. It's called like a confirmation setup, right? If you were trading this on a higher time frame, obviously you'd have wider stops. And then you can just see every time we revisit this within our trading session, we're just basically looking for it to do exactly the same. And we ultimately then get that expansion higher. All right. So, Nick, good question. Would it be better to pull the trigger at the top or the bottom of the FVG? So, for me, in terms of an execution, yeah. So, like we were just talking about there, is what I'm looking to do is as an execution, I'm looking to enter at the top of the fair value gap, right? So, just to give you an example, because we've got this open here, don't know if we actually trade down into this. We do not, but let's just give it as an example anyway. We don't quite trade down into this, right? But let's imagine that we do. So let's imagine that's our fair value gap there, our bullish fair value gap. And our rule is that we've swept this low, we've now broken this high, so we're looking for price to re-tap this. My entry always goes on the top line of the fair value gap. Yeah, because I'd rather make sure that I'm tagged in rather than price getting very close. Because if I'm right, this could get bought up very quickly, and we can see that by the long downside wick. Yeah, that's what we're looking for. So for me, if it's an execution, then I'm looking for the top of the fair value gap. If, however, something like this, if I'm looking for it to tell me or kind of give me an indication of whether it's ready to suppress price, you can also look for the reaction here. Yeah. So look what happens. Price comes in to our inverse here, right? So price comes in, just remembering here that we haven't broken above this yet, right? So we would still be treating this as bearish. So we obviously don't just want to put a limit order there because price could rip through this like it did here and then it's just taken out our order. What we can do is wait for the reaction. See this strong high wick, bullish engulfing body, bearish engulfing body. What does it do? It leaves this fair value gap in its wake. So now I'm on a lower time frame in here looking for that breakdown structure. Yeah, ultimately targeting these equal lows below. All right, so I like to use it in terms of looking for confirmation. All right, guys. But that's if I'm trading it in terms of finding out my position or my bias. However, if I'm trading it, like I said before, in terms of a trigger mechanism, which is a lot easier to show you guys on here. Then what I'm doing is I'm just taking the very, very top end. Was that all nice and clear? Was it, mate? Perfect. All right. I'll just show you a very quick example. Let's have a look. So what do we want to do? Nice bearish one here. Let's find you a bullish one. Okay, end of the London session. Yeah, so bullish bias. Why? Because we're above this. Remember, as we did our high time frame analysis earlier, while we hold this, look at the reactions we're getting when we dip into it. That's what we're interested in. So I'm in my trading session, for example, whatever that is to you, or maybe you trade it all day. What I'm ultimately looking for is price to sweep liquidity below a low. Yeah, and we have this low here, this low here. Lovely, we get this initial sweep and then a big purge. Then remember what I said. I want to see a shift in market structure. Leaving a fair value gap. So in this case, this is our bullish fair value gap. This is how my position would look. As soon as we leave this fair value gap here, yeah, then I'm saying, okay, once we've done that, which happens when we close here, my position gets opened at the top of the FVG. My stops go a few points below the price swing low, and then I'm targeting the nearest clean high, local high, yeah, and then that would be basically how I would look to day trade that, right? Yes, you can see this later down the line. You get this big expansion, and ultimately we would have been rejected at these fair value gaps. So we'd have got maybe a couple of R on the table if once we'd taken partials. But then when price purges back down here, I think a mistake a lot of people make, right, is that they then lose confidence. So let's say, for example, we didn't move our stops up here, and we see the price hit and it starts to go up and we're feeling $1 million, right? We're like, this is beautiful. Or we did move our stops up, we didn't take any profit, and then bang, crap, we've just been taken out of the trade. The mistake I see a lot of people make is then think that this is all of a sudden going to become bearish. Don't do it. Zoom out, right? Go back on your higher time frame and say, whoa. Okay, hang on a minute. Now, thankfully, we've got this on here, right? Which is a great indication that we've got a bullish bias. So all of a sudden, we're saying, okay, well, look, we're in New York. Love trading New York, right? So what do I want to see? Remember exactly what we were discussing before, yeah? A couple of things which I'll bring together for you now. This is our sweep, right? Important. All of our moves need to start with a sweep. Why? We could just place a limit order on here, but every time price rips through it, we just don't know if it's going to hold. For me, I like to see confirmation, right? So what have we got? When we look closer, like I say, I would trade this typically on a lower time frame, right? But all we're looking for are these key highs and lows. Price has swept liquidity. What do I want to see? Well, if I want to be bullish, I need to see this flipped from, first of all, a bearish fair value gap, which it is here. So price sets a bearish fair value gap, we get an impulse move lower. What do we then want to see? We want to see an impulse move higher, yeah? Now, this candle here to me is very important for two reasons. One, it takes out a local high. And this isn't just a local high, right? This is what, for any ICT students out there, would call an intermediate term high, because it's rebalancing a fair value gap. Meaning that when this gets taken out, yeah, and we would look for a close above it in this case, that's when we can look to shift bias. I won't go too much deeper into that because it's a little bit off topic. But however, we ultimately have this high here that's violated here, yeah? And then when price comes back down, what are we looking to hold? This. We're closing above this, yeah? So we can use these opportunities here to get ourselves back into a bullish position on the lower time frame, yeah? And we know immediately that we've just got these highs above here. If price really starts to run away from us, like it does here, right, but we have a high conviction that higher prices are imminent, then all we can do when price runs, I don't like to FOMO into anything, right? What I will do is I will just take my fair value gaps as price delivers, gets higher, doesn't return here, but what happens here? We leave another FVG here, right? So when price then draws into this, look how the bodies are just respecting it beautifully, and we can see the wicks as well. So what we can do is we can flip onto a lower time frame. And this is applicable across all different time frames, guys, whether you're moving from an hourly down to a, it screwed us for the data point, unfortunately. Still don't know what you've got to do. I mean, you've got like the highest membership level possible on this. It still doesn't really enjoy you having the data. But anyway, I don't want to digress or get caught down into that point too much. But what we would ultimately be doing is we can then look at these places on the lower time frames to secure the same type of entry. Yeah. So that way we're not FOMOing in here and end up getting filled up here because price runs on a market order before it reverses. Yeah. We can just break down and just keep looking for our entry techniques. Yeah. But like I said, you would have to have a clear and obvious target, this one being an example of where you believe price is going to run to, and then it allows you to trade with more conviction. All right. Sorry, just going to spend just a moment looking back through some questions. Nick, you're very welcome, mate. Cool. I know. I'm glad that's clear. Thanks, guys, for confirming that. Yeah, fair value gap at the top. That's correct. Hasta la vista Barbie. What a brilliant name. How works the order blocks in your TA? Great stream. Actually, Hasta la vista Barbie, I don't know if you get the opportunity to do so, but let me see if I've just got these ones drawn up here still. But we've actually just covered that in quite a lot of detail at the beginning of the stream. As soon as this finishes being live, it's going to all be available for you. Yeah? So let me just look on here. Yeah, so if you want to, at the end of this stream, mate, have a little rewind, go to the beginning, and I explain exactly how I look for order blocks. But just to give you a very, very quick example, yeah, and just let me delete this for a second. If I'm looking at this here, you see we've got this kind of consolidation kind of area here, right? Now, what's very prominent here is this big move downwards, yeah? So you see we have an impulse move lower, and within that, we leave these fair value gaps. The other key point of information here is this is clearly being held below what could be considered a support and resistance level, yeah? Just to throw a really rough line on there. Why? Resistance, 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 deviation, price gets back underneath, sells off aggressively to find liquidity. Comes back to it, sells off again. That's another thing that gives us extra validation that this last high volume up candle here would be our bearish order block. Yeah. So when price returns to it here, we look for shorts. Here we look for shorts. Here, obviously, here as well, until we ultimately reclaim it, retest it, use it as support, and then we would flip our bias to being more to being bullish again. All right. Like I say, I go over it in a lot more detail, although to be honest, I do waffle on these points sometimes. So that might have actually been the best and clearest explanation that I've given. But I hope that's helpful, mate. Please do have a look. Thank you very much for the compliment, and do reach out to me if you've got any more questions on it. I should really kind of do a thread on this as well, shouldn't I? Hans, BC, can a person trade higher, longer time frames, weekly and monthly, to long or short the market with a lower leverage? Yeah, sure. I mean, I think, look, for me, price is fractal. Yeah. So if we just knock all this back for a second and save this down as our live show in case we want to look back on it. The date today, the 7th, isn't it? So live on the 7th. Goodness me, 7th of August. Would you believe it? 23. Right, so let me just show you something here. Now, obviously, the larger the time frame or the bigger percentage of the move that you have, then less you may need leverage, right? Leverage really is there to cover your position size for your margin, meaning that, it means that you just don't have to risk as much money. Yeah, because if I'm, say, for example, I want to trade a position on a 1 minute chart, yeah, then my win on a 1 minute chart might be like 0.22% or 0.4%, right? So to make a position size big enough for my risk to be what I want my risk to be, it means that position is going to have to be a lot larger, right? So let me show you an example of that very quickly. So if we've got two trades here, two long positions, right? And this long position here is a 2-to-1, yeah? But this long position that we've got here, which takes place over a larger period of time, is also a 2-to-1, yeah? So that means 2-to-1 as in risk to reward. I mean, if your risk is $100, yeah, then you're going to get $200 back if you win, lose $100 plus your fee if you lose. Everyone understand that so far? That's the same for that trade as it is for that trade because both of them are 2R. However, the big difference is that the win percentage here is 5.65 and the loss is 2.82. Here is 43.2 and 21.6. So how does that affect everything? Well, I'll show you. Using my dear friend and funny little bastard legend that he is, Razoon, his position size calculator, right? You can get this free if you take on the trial at the nest or just drop us a line or something. So first I'm going to put my position where my entry is, then I'm going to put my stop loss, and then where my target is. Right, now, the huge difference here, right, is when we look down here at the box, our position size needs to be quite ominous actually, 666, right, 0.34. That means that we need a total position size of $664.34, yeah? Which means that if we use 10x leverage, we're borrowing, we only have to put up 10% for our margin, which is $66, right? So if we're now looking at it on this larger scale, so we move that up to there, right? Stop loss down to here. What you'll notice is the return on the P&L isn't much difference, but look how much smaller the position size is because of the percentages. So if your entire position size is only $92, yeah, if you want to use 10x leverage, you're only risking 9.21. That's your margin. It means if you get margin calls, right, that's what they're going to take off you. You're borrowing the rest of that from the exchange. Yeah. And that's when funding rate and bits and pieces like that come in as well. So in terms of looking for larger position sizes, yeah, absolutely, you can reduce your leverage because, as you can see from that, a 2-to-1 on a much larger trade size requires a much smaller position size. So you don't necessarily need margin. You can trade with what's in your account, all right? But in terms of the technicals from higher time frame to lower time frame, they're absolutely transferable. You just need to make sure you've got a good understanding of what represents your higher time frame, what's your medium time frame, and then what's your execution time frame. So I hope that's answered your question, Hans. Again, if it hasn't, mate, please do reach out. Yusuf, if we have 2 minutes, please analyze YGG. Is that an altcoin, is it, Yusuf? Let me know, mate. We'll have a very quick look at that to end the stream, shall we? We've got a couple of minutes left. P. Malloy, awesome, mate. I'm glad you're enjoying it. Thank you very much. Craigie Boy, Wednesday, can we revisit Litecoin? Yes, I think there was interesting learning. Buy the rumor, sell the news, right? We didn't get the trade we want, and then we looked to be a lot of confirmation moves, but it broke down a lot. Yeah, classic manipulation of the markets, right? When smart money institutions are understanding that such a highly news-driven event can have advantage taken from it, right? Meaning that basically when price gets to a certain area and there's an expectation from a large body of people for it to continue or to exceed that, it's a really, really great area to go and hunt for their liquidity, right? And if you've got big presence in the market in terms of financially, you can flip those positions on people and really kind of catch them up and get them on the wrong side. So, for example, this was a brilliant one, right? You look at this on a high time frame here from Bitcoin. We put this high in, yeah? Terrible. Put this high in. Not able to draw with that today on the high time frame for some reason, so I'll stick to using my lines. We put this high in, right? Before price interacted with this. What happened? Price sold off. Price kind of broke down here. Everyone's like, it's over, right? Everything's going to zero. Price came down just deep enough to take that liquidity, and then it recovered. By the time we got this move here, people were like, nah, this is still bearish. I'm not going to let this drop. Institutions don't want to get on board here. Why? Because they won't necessarily have the liquidity. If they dump billions or hundreds of millions on the market, it could just crash, and their average entry gets lower and lower and lower, right? Meaning that they lose a lot of money on their entry. What's much better to do is have everybody in expectation the market's going to reverse here. Once again, we can look to our trusty fair value gaps here. So when price came into this here, our expectation was for rejection, yeah? Now we got that initial rejection. Maybe we got a little nice day trade in here lower, but ultimately when we closed back above it here, this became an inverse fair value gap, meaning that we then, our expectation on this close is for price to attack these highs. A lot of people don't see the markets that way, right? So ultimately what happened is people are typically late to the game. People are like, oh my God, we've taken out this high. Right. Oh my God, we're breaking out here. This thing's going to go to the moon. It's going to 100K, etc., etc. Ultimately, all that liquidity was gobbled up by larger players who then reversed the market here, we use our simple fair value gap methodology again, that was supposed to be bullish, right? So if we wanted continuation, don't FOMO in like retail up here. Wait for price to come down to a key area and see if it holds. Did it hold? Did it heck? Price ripped through that, turning that inverse, meaning that when we got this close here, we're looking for these to be attacked and then these, right? Ultimately, we then leave this bearish fair value gap, which gave us loads of beautiful entries in here. Just targeting liquidity lower, liquidity lower. Ultimately, what reversed the market was, again, if we're looking at the fair value gaps, what did this bearish fair value gap do? It got respected, right? Price drove lower. What did this bearish fair value gap do? Initially got respected, right? Respected, violated, closed above. This now turns to an inverse fair value gap, right? Leaving in it this beautiful bullish fair value gap. Which we then use to trade higher, all right? So it takes a while to kind of get your eyes in with the kind of market dynamics in this respect, right? I'm not suggesting it's for everyone or for everyone to do it, but I do find it really, really interesting. So when we're seeing these inefficiencies the same way, whatever time frame we're on at the moment, on a weekly time scale, when we had this big impulse move here, I was very vocal. Please be careful. We're going into this fair value gap over here, as well as this order block. Wait for price to retrace into the fair value gap down here. Look for long positions targeting this liquidity. The reason that I've been bearish since we hit this liquidity is because until we close above it, the likelihood for me is that we're drawing down into this weekly fair value gap here, looking for support for price to make a move higher. So as we draw down on the higher time frames, I'm looking for a bullish reaction here. If we do, though, however, violate this, turn it into an inverse, then I do expect price to trade lower. All right, guys? So I hope that's been really useful. Yusuf, are you still on the stream, my friend? I know you wanted me to take a quick look at YGG. I know we don't normally do this, but I think I missed out on a couple of yours over the last few weeks. So let me... I'm guessing it's one of these, is it, mate? YGG, maybe on the perp. Let's have a really quick look at it anyway, huh? Kind of put into practice what we've just been discussing there, yeah? I can see why you're interested in it, mate. That is absolutely ripped, isn't it? Okay, so let's look at exactly what we were just discussing, yeah? Now, there's not really a lot we can do here, guys. I would definitely not recommend anybody start chasing this. That's just my opinion, right? If you've got systems that say otherwise that are tested, by all means, please do. But, when you see big expensive moves like this, I think smart money's lining up to short this, right? Not to long it here. Why? Because you risk somewhere down here, your reward's up here somewhere. It's a terrible risk to reward play. Now, ultimately, what happened here was we ran these stops of the lows, yeah? If we look into our fair value gap technique again for a nice simple kind of read on this, we were expecting that to be bearish. Yeah, came in, we got a little rejection down into these lows. Price closed above it here, but I mean, look at what it did. Right? Daily might have given us at least some chance here, right? But yeah, daily scale was a lot nicer. And I'll tell you as for why, because we had a really, really clean and obvious high volume fair value gap here, right? Now, for me, when we're drawing back into this, look, we're not seeing any real clean and clear rejections in here. Once price has closed above it, this has gone from bearish to being inverted. And then look at how the bodies respect the bottom here, right? So then what we're doing is we're patient. Yeah, we can look for opportunities within opportunities, meaning that we then had this bearish fair value gap. When we closed above it here, on this very candle, look then how the bodies respect it. That's where we could start to get long. Probably for me, I would have waited for this bullish fair value gap here on this particular time frame. Yeah, and then we can hunt our long setups in here. When something really runs like this, there's often not a lot you can do. I'd be very, very surprised if that wasn't kind of news driven in there. But big moves like this, when you see so many inefficiencies left in their wake, this big fair value gap here, we really do start to drop, and I think it's probably fairly inevitable. I could be wrong. But that's definitely, if I was looking for continuation, yeah, on this time frame, I'd be saying, okay, if price is going to cool off, this needs to act as support. Let's wait for us to regain a bullish market structure, yeah, and then look to trade it higher from some FVG we'd be looking for in there, yeah. That's how I'd look to approach that. All right, guys. So, Yusuf, I hope you were live for that, mate. If not, thank you very much for the heads up. I certainly run that one past the FA team as well and see what their thoughts are on it to see if there's any reason or catalyst for that one. All right. And then, yeah, breaker blocks, of course. Dear God, I absolutely forgot, didn't I? So, let's look at this very quickly on a lower time frame. Let's say a 1 hour, because we're just going to have to reverse just a smidge. So, try and find you a relatively clean example here. If we were looking from a bearish perspective, right, what you're looking for is for price to run liquidity. Yeah. So, actually, let me show you an executable time frame example. Right. So now let's imagine, and these always work best with confluence, right? So let's just imagine that we've got some kind of support level here, price is coming into. This could be an order block, this could be a higher time frame, fair value gap, right? Something like that, or even if you're using straightforward support and resistance, right? A breaker block is, in this case, if we're bullish, we're looking for the last up candle before the purge on liquidity, right? This was the purge on liquidity. Yeah, that's the low that was swept. What's the last up candle before price swept that low? It's this one. I do my breaker blocks in orange, right? And then quite simply, when price closes above this, so I'd need to see this candle here. I like to see a bit of impulse, yeah, consecutive bullish candles showing me there's momentum moving higher. Where's my first kind of get out of jail free card? Is here. So this is how my position would look. I wait for the sweep on liquidity. I set the order. I set the breaker block. Now, until we get a close above this, I've got no interest in entering here. But once we do get that close, my limit order goes on here. Your stop loss can either go a few pips under the breaker block, which is what I would do in this instance because we have such a long downside wick and because our initial target is close, or 1.8 risk to reward, right? But ultimately, we know that realistically, we're aiming for this high here. And actually, we've got a really lovely clean high here as well. But we would monitor price action at these intersections. And what I want to see is price get above them and then hold them as support. Yeah. If we start to break down from here, I'd start to close out the position. And what we can see happened really lovely here is this didn't really give us any need. Yeah. But look here how clean those levels are. See how they're flipped? Strong move above, holds it. Strong move above, holds it. Price started to break down here. You can then start to get out of your positions. All right. So that's a breaker block. If we're looking for it in the opposite, yeah, just to show you we never want to cherry pick. I think I use these things slightly different to some people, right? Because you'll see ICT teach them as the high volume candle before the move down, which I do say because that's how I want people to kind of see it. The original teachings, please do go to the origin of the content. But let me just delete this for a second and show you a bearish example. And you can see it's right next to the bullish one, right? So we're not cherry picking these. We've ultimately got a sweep on liquidity. Right? What happens? You see we shift structure here, right? So what happens? Sweep on liquidity, price breaks down. What do we want? The last down candle, which for me is this one. Yeah. Before price sweeps liquidity. So that's the down move before the move higher. We then want to see an impulse move away. We want to see price close below, which it does here. You'll notice it doesn't quite come back to that. Some purists would say this is your down candle. For me, I just like to take that last one. I take from wick to wick. We didn't quite react with it here, but we did here. Yeah. We can then either drop to a lower time frame and look for a confirmation setup, or we can have our limit orders set in here. Yeah. And like I said before, not to cherry pick, you need to decide whether you're going to take the risk of putting this all the way above the swing higher, or whether you're going to take a riskier approach and put it a few pips above the breaker block. You can see you would have just got away with it here, as you would have done on the last one. But again, that's more for you guys to figure out, right? And the same thing here. When price came down and interacted with this, price closes below, it then comes back above here, holds here, yeah? If we take out this high, I'm then closing my position out, right? But I definitely taken profit once we close back above here. All right? So I hope that kind of explains it a bit better. Just remember with breaker blocks, the big confusion that I think a lot of people have with them and order blocks is that with an order block, you're looking for the last up candle to be your bearish order block, yeah? So if this was an order block that we're looking at, which it very much could be, yeah, if that's a bearish order block that we're looking at, why? Because it's the last up candle before price broke structure. We came into a key point of resistance and we've left inefficiencies on the move down, meaning that when we return here, we have bearish expectations. When we return here, we had bearish expectations. But what flipped us? This strong close above means we're now looking at that as an inverse order block, and we can now start to look for longs in here. All right, guys, just remember that the difference between that and a breaker is if we're looking for a bearish breaker, yeah, we're actually looking for the down candle, yeah, rather than the up. So the down candle before the sweep on liquidity, price breaks down lower, we revisit that. That's then when we look for our short triggers. All right, guys. Definitely looking like some colourful charts today, aren't they? I'll tell you that. Whack, I'm so glad you managed to make it for the stream today. James, you're very welcome, mate. Thanks again for being part of it. Look forward to seeing you over in the prop desk in a couple of minutes. Get that New York session undergo for the FX markets. And Whack, absolutely awesome, mate. Thanks for going over the OBs and breaker blocks. Got a nip off, but we'll rewatch later. Fantastic. Reach out if you've got any questions, buddy. Trader ZA, good to see you on here, buddy. You're very welcome. Great stream again. GOT, you're welcome, mate. Fantastic. Kelly, you absolute legend, always producing the goods. Oh, lovely. Very kind of you to say. Well, it's really, really nice. I get a lot out of this as well, guys. Love seeing you guys, love working with you or watching you develop. And I hope that some of the mistakes, things that I've done well, things that I've done badly in my trading career so far, give you guys some insight, and very much look forward to sharing a lot more of those with you over time as well. Lisa, you're very welcome. Great to have you on the stream as well. Pissquit, I didn't see you sneaking, mate. Welcome. Glad you enjoyed it. Hans, Erica, everyone. Nick, who we had in the stream. Obviously, our lovely Kelly, all the way from New Zealand. MMGOT, Z8, Trader ZA, sorry. Great to see you on here. Whack as well. Obviously, James 14. Hasta la Vista Barbie, which I think is just a brilliant name. Craigie Boy, who was here as well. P. Malloy, Yusef as well. Just looking back here now, Erica, obviously our lovely Erica, who's always here. AD, I saw you sneak in there. Sorry, mate, I didn't see your Pepe request. We'll make a note to cover that one on the show on Wednesday when we look at that. Arno Kaufman as well. Good to see you on here, buddy, as well. Eric M. Touche, who was on earlier as well. Absolute legend. And part of a group of a really, really dear friend of mine, Trader Dank. So, without further ado, try to keep these streams shorter, keep making them longer, but hopefully they're value to everyone. Nothing but love for you all, guys. If you're interested at all in anything over at the Nest, please do look in the description below. We've got some really cool offers and bits and pieces going on at the moment. If not, you can always reach out to me on Twitter. Nemesis as well, back on there. I didn't see you sneaking. And Trader Pie, good to see you as well, mate. Very much welcome. So yeah, we're going to be back Wednesday for alt requests. Yeah, so if you've got any bits and pieces, I see a few came up today for like Pepe and bits and bobs, or some more obscure ones like this YGG, which is good for me as well, because I really don't stay as up to date with that market as maybe I should. So get them together. Let's jump on the stream on Wednesday, and we'll just aim to rip through as many charts as we can. Have a fantastic week, guys. Look forward to seeing you around the Nest.